Hi, Francesco. Do you hear me?
Yes, I can hear you. Hello.
Can you also enable the video? If I
Trying to see, but I'll try now. Speakers,
It should
we can
be,
see.
I see
No,
also there is mic and camera.
no, to my space. I'm on the computer. From the computer, it's just a mic.
Okay.
There is no camera.
Can you try to join from the phone?
Okay, get out of it.
Okay. Yes, wait for, so we wait for Joe in few seconds or minutes. I will write him. Okay, he wrote me that he joined shortly. Okay. So we will wait. Is it the first time that we do with video? Let's see. We're waiting. Okay, I think it's. Yes. So I remove from your cost and then I will. Okay. Now, okay. Hi, both. Hi,
Hello,
Francesco. Hi, Joe.
can you
Hey
see
guys.
me?
Yes, we can. I can hear you. Are you able to see me from the video?
Yes,
I'm
yes,
able to see you.
Yes. Do you have
yes.
the option camera? It's the first time that we are trying this.
I do not right now. Maybe I need to be a host. I'm not sure.
I will invite you both for co-host. Let's see. It's the first time. I mean, that's so far we had. Or later I will also read more, maybe from Nix, maybe only the host. But it would be strange. Okay, now you're. Yes, Francesco, I can
Okay.
see you. Yes.
Oh, hello, hello.
Great. Joe, if you join us, I invite you as co-host. Let's see. Yes. Okay, it's now co-host.
Can you guys hear me still?
Yes, we can. I can
Oh,
hear
there
you.
we go. Oh, here we go. Perfect.
You should have the option camera if you are in your phone.
Yes.
Okay.
One sec.
Yes. Okay, great. Yeah, we see you. I think we see the person who speak with is on the screen. Great.
Very cool.
Okay. Then let's start because we will do also the video in YouTube. So welcome on. Welcome to the 14th episode of Store of Bitcoin, Bitcoin as a store of value. And we are pleased today to have Joe Burnett as our guest. He's a famous Bitcoin account in X, Bitcoin analyst, and is working in Unchained.com. We are following you since a while, and I really appreciate your post, especially Joe. I saw your report. I read your report. Your wealth is melting, and I think it will be a great point to discuss if you can start summarizing your report. And thanks to be here.
Yeah, absolutely. Thanks for having me. Okay, cool. I see the video. So this is cool.
Yes.
Video on Twitter. Yeah, so I guess I can start maybe a little bit about me, and then I can go into the report. I started my career in technology consulting at EY. I then joined a Bitcoin company at the top of the 2021 bull market, where I was an analyst and then product manager / analyst for Blockware Solutions, a Bitcoin mining company, and then did that for 2 years. And then in fall of last year, I joined Unchained, where we help people secure billions of dollars worth of Bitcoin. But yeah, the report, Your Wealth is Melting. I I think I wanted to write the report because I think a lot of people in the world look at Bitcoin the wrong way. They see Bitcoin as this speculative bet, a lottery ticket that could one day be worth millions of dollars or one day be worth, $0. And I think that that's kind of with very low odds, I guess, is how most people would look at it. And I don't think that that's the best way to think about Bitcoin. I think the better way to think about Bitcoin is using Bitcoin as money. And that means like using Bitcoin as ultimately a unit of account, and then measuring your wealth or your assets or anything that you hold to preserve your wealth in Bitcoin terms. So measuring your real estate, measuring your stocks, your public equities, your private equities, your bonds, your gold, all of these assets that you hold should be measured in something, and that something is called what we all know as money. And my argument, and your wealth is melting, is that Bitcoin is the best money. Now we're in the early monetization phase of Bitcoin, so its value is going up incredibly rapidly, and that creates a lot of volatility. But at the end of the day, you should still already be using it as a tool of measurement. And I think a lot of people that are managing wealth today are putting wealth into the wrong baskets, whether that's real estate, public equities, or bonds, and they should be putting a lot of their wealth into Bitcoin. And the results over the last 15 years have showed that Bitcoin is the best way to preserve wealth. And if you did hold those other traditional assets, your wealth has been melting in Bitcoin terms.
I see
that first mentioned of like the inflation in consumer goods and kind of the idea that we can create more of all of these assets. I think that that's a really interesting point where like a lot of people recognize that our asset or like we're able to produce more and more basic consumer goods every single year, whether that's like water bottles, food, or lumber, or oil, or whatnot. But I think the same concept applies to what we use as savings or what we invest in today. Like real estate is no different. We can build more houses, we can build more apartments, just like we can create more food. Obviously, real estate is a lot more relatively scarce than food and other like basic consumer goods. But the same concept does apply that if the price of food or whatever goes up a lot, that's a market incentive for producers to go out there and produce more food. If the price of real estate goes up a lot, then that creates a market incentive for people to go out and build more houses and build more buildings or build more apartment complexes. So I think that's kind of like the step that I took a little bit further in the report of like, hey, these things that you're holding today are not immune to debasement, just like food and other consumer goods are not immune to debasement. But Bitcoin, on the other hand, is immune to debasement. And this is all your last point of investing versus saving. There's still reason to hold profitable businesses or even unprofitable businesses, or there's still reason to hold real estate, whether that's for consumption or you happen to spot a area that is, in your view, relatively undervalued, and you can produce real, houses or apartment buildings at a cost cheaper than the market is selling them at. Then maybe that's a good business to go out there and build real estate or even hold real estate. But the problem is, if you look at the valuation of profitable companies or real estate or bonds or anything, the valuations don't really make much sense because everyone in today's world that's outside of Bitcoin knows the dollar is designed to debase. So they just throw their money at all of these different assets, no matter really what the valuation is, and then hope that they all go up, keep going up forever. But now that we actually have Bitcoin, we can more clearly distinguish between like the idea of investing and saving. And I think that that's going to change a lot of things because now you don't have to just perpetually chase yield by buying Nvidia at a $3 trillion plus market cap, or buying more and more single family homes, driving up the price of homes for normal people that would just want to consume them with their family. So yeah, I think that's kind of the big idea with Bitcoin is now we actually have a tool that enables us to save properly and effectively.
Great. Thanks for the summary. Totally agree. And it's actually is great how you discuss also about the production that is increasing. So the price should go down. And also the comparison for any other type of investment, from stocks to bonds to real estate. I think will be is very helpful piece for people to help people to understand Bitcoin. As you said, the delta is still too high between what people who understood Bitcoin think about Bitcoin and what people who didn't study Bitcoin think about Bitcoin. As you mentioned at the beginning, they think that we are like speculative. If you are very exposed on Bitcoin, they think that we are like risky people, while like we like to gamble, we like to go to the casino, while it's exactly the opposite. I'm also exposing Bitcoin because we are exposing Bitcoin also because we are risk adverse and we don't like risk. And to reach that level, it will maybe take some time, but we will reach there from the global population. What you said on inflation, I think the last years is helping people to understand that inflation is becoming a problem. So far, inflation was 1 or 1.5%. It was hard from Bitcoiners to say inflation is a problem because people think 2% inflation is good for the society, it's good for the to stimulate the economy. It's totally wrong, but it's hard to debunk if you didn't study. Now we had 6-7% inflation in Europe, so people are in US as well, and so people start to understand that inflation is a problem. What is still hard is to understand that Bitcoin is the solution and Bitcoin is a safe investment, being the best store of value. What would you say if someone is still saying Bitcoin is speculative, is risky?
Yeah, it's a good question, because a lot of people obviously do see Bitcoin as speculative and risky. And to some extent, like in the short term, I would actually say that they're correct. Like the exchange rate of Bitcoin is hyper volatile in the short term. So that obviously somewhat scares a lot of people away from Bitcoin and hinders them from like maybe adopting it faster than they would. But I also think the volatility also helps to some extent. It just depends on your perspective and how you're looking at it. I think like the key thing to understand with Bitcoin is like it's the least uncertain money, as Pierre Rochard has referred to Bitcoin, where we know its monetary properties. It's portable, durable, divisible, uh, fungible. It's immutably scarce, and you can hold it without counterparty risk, right? Like it's one of the few. I know I was watching Michael Saylor's Prague presentation earlier this morning, and he mentioned one of the rules of Bitcoin, which is it's like one of the only assets that you can actually own. And to some extent, he's right about that. It's like it's one of the only assets that you can own really without true counterparty risk. Like if you hold real estate, it's effectively an entry in your government database or your mayor's database. If you hold public equities or stocks, you're holding a certificate that says you have some right to dividends from this management team, which is operating a business. And business is subject to competition, subject to regulation, subject to a lot of different potential problems that could happen with any sort of business. And there's risk. There's a lot of counterparty risk to a business. Bonds is obviously you're lending someone else's money, and there's obviously going to be counterparty risk there. So Bitcoin, as long as you hold the private keys, you actually do hold Bitcoin. And as long as you run a full node, you enforce the rules of the network and you can verify that you actually hold Bitcoin. And then you could broadcast transactions to other people if you ever want to move your Bitcoin or spend your Bitcoin. So yeah, I mean, it's risky in the short term because it's so volatile, and it's so volatile because it's growing at 100% compound annual growth rate for like the last 14 plus years or more than that probably. So anything that's going to grow at 100% compound annual growth rate for 14 years is going to have to be volatile, right? There's going to be waves of adoption where speculators come in and try to like front run the next 100% that's coming, the following year. That's what leads to Bitcoin going parabolic in an unsustainable manner. and then the parabolic growth that goes absolutely crazy, or exponential growth that goes absolutely crazy, is followed by like a dark bear market, because Bitcoin is only growing at 100% per year. It's not necessarily growing at 1,000% per year like it does occasionally in some years when speculators get a little too far ahead of themselves. So yeah, people view it as risky because of the volatility, but I think the volatility is really only there because it's growing so fast because the world's monetizing it, and that confuses a lot of people. And then most importantly, it's like Bitcoin is the least uncertain monetary tool. And if that's true, which I think it is when you objectively look at its monetary properties, then it's actually pretty safe as long as you have a long time horizon. In fact, it's probably the safest asset that you can hold with a long time horizon. So that's kind of how I would argue against, Bitcoin is still a speculative bet. I think what eventually convinces people that this is not the case is just more NGU technology, number go up technology. I think that's kind of what eventually gets everybody into Bitcoin, or at least forces them to question their original assumptions that, hey, Bitcoin was just this worthless bubble or this speculative gamble. And that it forces them to realize hey, there might be something there. Maybe I need to spend a couple hours reading about Bitcoin or listening to a podcast with Michael Saylor or whoever else in the Bitcoin community, and then encouraging them to obtain their initial Bitcoin position, maybe probably less than 1% of their personal portfolio. And then once you have that initial position, it forces you to really start to dive deeper into Bitcoin. You pay attention more to the price. You read a book about it. You read another book about it. You listen to more podcasts. And then sooner than later, I think you start to get convinced that there aren't really many good arguments against Bitcoin. And at that point, you're just like, okay, I need to buy more Bitcoin. Programmatic scarcity of Bitcoin, right? Like you mentioned the idea that there's a maximum limit of 21 million Bitcoin, yet currently there's only 19.7 million Bitcoin that are circulating, that are held by private keys, and people can, if they haven't lost their private keys, people can move that Bitcoin and send it somewhere else. But with that said, there is that I guess 1.3 million or whatever it is remaining Bitcoin left to be mined, or whatever the number is, remaining Bitcoin left to be mined. And that gets mined by miners over time at a predetermined programmatic schedule. No matter how much hash rate comes on the network, no matter how much energy is spent mining Bitcoin, no matter how much resources, human capital, dollars that are invested into the mining industry to mine Bitcoin, there's still going to be more Bitcoin to be mined. And every 4 years, we have this halving where that amount of Bitcoin gets mined less, or the amount of Bitcoin that gets mined roughly every 10 minutes gets mined less over time. And then eventually the halving occurs, or 32 halvings occur, and the block subsidy drops to 0 Bitcoin, and all 21 million Bitcoin exist. I think that that does how you have the stock to flow model and the power law model and whatnot. I think there is some credibility to thinking about Bitcoin from the perspective of stock to flow, because I do think most Bitcoin out there is just sat on and held for a very long time and doesn't move. There's some Bitcoin that's obviously traded on a daily basis, but I tend to believe that those are just kind of the same coins, just getting passed back and forth by speculators and people that are just betting on the price of Bitcoin in the short term. And the one true seller in the market, which is selling billions of dollars worth of Bitcoin every year, are the miners that are mining those marginally new coins and then selling them on their exchange or OTC, or however, depending on the size of the miner, however they want to sell the coins. So I think that miners do play a role in kind of distributing the coins at first. And that's what they've been doing for the last 14 years. And I expect them to continue doing that for the next 14 years. And I do think after each halving occurs, that's kind of a bullish catalyst to Bitcoin, because now there's less forced selling from miners each halving epoch. And I generally think that that's going to be good for the price of Bitcoin, because again, I think 4 years from now, if you look at the HODL waves or whatever that's right behind me, you'll tend to see more and more Bitcoin is held for longer and longer durations. And again, the price of Bitcoin is determined by the marginal buyer and the marginal seller. And if most Bitcoin is just hodled for years and years, then the small circulating supply that moved in the last week or the last month, that's kind of the supply of Bitcoin that's determining the price of Bitcoin. And I think that sliver will get smaller and smaller, and there will just be less and less Bitcoin for sale. At the same time, demand will be going up faster and faster as, one, more people want to adopt Bitcoin as savings technology, but two, there's just more dollars circulating, period. So there's going to be more dollars chasing fewer Bitcoin. Maybe that answered your question, maybe it didn't, but those are my thoughts there.
No, it's clear. It's at least equally important. But another point on volatility, because if we look at what Saylor did with the purchase of the Bitcoin and the stock, and then he said that the interest took off when a certain market cap was reached with the stock, a certain volume of purchase, and then the traders they started to bid options and things like that. So I think that the volatility, although we don't suggest as educator to trade anything, just order, but for professional people also to look at it with another eye. From the volatility incentivizes these bets, these options, these futures. The people they make it as a job, for them, and that in turn incentivizes the adoption of Bitcoin. So the volatility could be also a driver for this professional to get into the market through their own lens, which eventually a few will survive, but the price, the volume, and the credibility of Bitcoin will benefit anyway. What's your take on that?
Yeah, no, I agree. I mean, I think from my understanding, what Saylor is doing is enabling, is effectively issuing like convertible notes that are somewhat like call options with the downside protection of debt. Is my video working, by the way, or is it not working?
No, it's not
at the
working.
moment.
No. I'll try to
Also,
the camera.
Okay. You guys can still hear me though, right?
Yes, we can listen to you, hear you.
Okay.
Yes.
I have camera on, but I don't know. I'll keep
Let
talking.
me go on. Yes.
It'll come back. But yeah, so Saylor's issuing these convertible notes where he's effectively borrowing money at zero, close to 0%. It's like 0% or 2% or whatever each note is. And the reason he's able to do that is because his stock is so volatile, right? And the reason his stock is so volatile is because he holds a ton of Bitcoin, and he's also just borrowing money and buying more Bitcoin with it. So it's somewhat leveraged Bitcoin. And the people that are buying these notes are effectively people that are want debt, but also want some upside when it comes to Bitcoin and MicroStrategy stock, because a convertible note is effectively enables you to buy MicroStrategy at a certain set price at some date in the future. And the price is obviously higher than the current price of MicroStrategy stock, but it is higher than the current price. And so, yeah, I think the reason he's able to do that is because his stock is so volatile, and that's what's enabled him to borrow so much money, $500 million or whatever, at the lowest possible interest rates, and that's kind of enabling him to do this, which I think is good for Bitcoin, or at least good for him to acquire as much Bitcoin as possible in the short term. I also think like the volatility is a good thing because it shakes people out, which is bad to be the one that got shaken out, but good to be good for Bitcoin as a whole. Like looking back at March 2020, we saw an absolute purge of anyone that was leveraged long Bitcoin with like short duration debt or in the perpetual swap market or with Bitcoin futures, right? If you were 2x long Bitcoin or 10x long Bitcoin or even more, you pretty much got wiped out back in March 2020, which is kind of it was bad for you at the time, but it moved your your coins into the hands of people that are more responsible, that were willing to buy the dip, at $4,000 Bitcoin or $3,000 Bitcoin back in March 2020. Like the only people buying Bitcoin at $3,000 Bitcoin in March 2020, when Bitcoin fell, 50% in one day, which is pretty insane volatility. The only people buying that are people that have a very solid understanding of what Bitcoin is. They're hyper bullish on Bitcoin, and they're willing to probably hold it through some pretty insane volatility, which is very reasonable. Like who in their mind, in the traditional world would think about buying Bitcoin at the bottom of March 2020. So the Bitcoin plebs and the Bitcoin psychopaths were the one that bought that carnage. And it effectively, when the plebs and the people that really understand spot Bitcoin, when they're the ones holding a large percentage of the Bitcoin, they're also going to be the ones that are not selling Bitcoin at any price near, or not selling much Bitcoin at any price near where it trades at today. So I think the volatility kind of accelerates coins moving from weak hands to strong hands, and I think that's a good process for Bitcoin or any asset. Honestly, that's a good high quality asset.
Cannot hear you, Alessandro.
Yes, now yes, I was on mute. Yes, so great way. We are still adapting to the video. It's the first time. So there are a little more one more level of complexity. So yeah, great way to discuss about the volatility. I think it's also as Bitcoiners, we are doing a great. We are trying to do on trying to explain people that volatility first is a feature, not a bug. That if we increase for having 100% in average increase, you should have per year. You should have a volatility, and also instructing as investor versus traders. So Bitcoin is not an asset to trade, but Bitcoin is an asset to invest. And if you had a 4 years period of holding period, then 100% or 99 point something percent you will be in profit. One of the things is many people in my opinion, overestimate how difficult it is to hold when Bitcoin goes down. They think, okay, yes, I can hold, it's not a problem. Like if they went up 50% and then crash for 20%, then it's easier. But if they buy higher and then it goes 15, 20%, 25, maybe some people will say, yes, I will hold, but then they will not. And on your point on like improving the quality of hodler, I think also we have the same effect in 2023 when so Bitcoin moved from 69K in November 2021 to 15.5 in November 2022. So most of we call them the tourists on Bitcoin, they were flushed out. And from at least from 15 to 30, 35, I will also assume 95% it was bought from people who have deep knowledge on Bitcoin. So now the percentage of hodler, you see also in your curve, and every month there is also an update. The amount of coin not moved from 6 months, 1 year, it was always increase, maybe till when Bitcoin went up to 65, 70, 73. At this point, it's also normal that someone is selling not real Bitcoiners, but people who have maybe 70% profit and they sell. So it's part of the feature. And considering that now the quality is increasing every year, do you think it will be less likely that we will have big crashes as in the past, or we still have possibility to have 50, 70, 80% crash?
So it's definitely a great question, and I've tried to think about this for some time. Oh yeah, I guess my video is still not working, but oh well.
Can you maybe switch on your camera? Maybe camera on and camera off.
I tried that, still nothing.
Okay, it's not working. Okay, no problem.
So yeah, I thought this would be potentially the case back in like 2020, 2021. I was like, in 2020, Michael Saylor adopted, the Bitcoin strategy. I remember like reading the press release at the time and seeing like this cool public, like this, relatively small public company was going to adopt Bitcoin as their primary treasury reserve asset, which I thought was like really cool at the time because we were just a bunch of people on, Twitter or whatnot talking about Bitcoin. And, some of us at the time thought that this would open the floodgates to, corporate adoption of Bitcoin, where MicroStrategy effectively the first domino. And then sooner rather than later, we would see, an avalanche of other publicly traded companies kind of follow suit once, especially, post COVID when the monetary stimulus was unloaded. And we, in 2021 saw pretty significant CPI inflation. We saw markets and, public equities, real estate, all markets globally kind of explode from 2020 to 2021. And people thought that Bitcoin was going to explode, and maybe we were going to enter a period of high inflation where there wouldn't be many drawdowns in the price of Bitcoin, and especially like 100 or real estate or other asset classes. So at the time, I kind of thought that maybe like the maximum downside we would see would be like 50%. And of course, that was completely proven wrong back in 2021 and 2022 and 2023. Bitcoin, like you said, went to 69,000 or whatever it was, back down to 15,000. I think that bear market was still less than the other bear markets that we've Bitcoin has historically experienced. But I also think that I think it's possible that the bull market was muted in 2021, and because Bitcoin did trade at like 50 to 60,000 for a pretty significant amount of time, like two separate times. It did it in the spring of 2021, and then it did it in the fall and I guess winter months of 2021 as well. So like we didn't have that rapid blow off top in 2021 where Bitcoin just went like parabolic to over 100K and then crashed back down. Kind of 17 where Bitcoin literally went to $20,000 or $19,700 or whatever it was, and then didn't stay there for very long at all. Like I think in 2017, 2018, like it may have been a month where Bitcoin was above, like $8,000. So like the $19,000 price that people like anchored to back in 2017 was was just like a very short-lived phenomenon, and that's what historically has happened in Bitcoin bull markets until 2021, when we didn't really have that, where we didn't have a blow off top. And so maybe that's part of the reason why back in 2022 and like 2022 and beginning of 2023, Bitcoin didn't fall as much percentage wise from the 2021 top because there wasn't that blow off top. But yet it still did fall, even with that help having a blow off top in 2021, Bitcoin still fell significantly more than 50%. So I would personally, I don't expect, I think I was very wrong when I thought that Bitcoin would not fall like more than 50% back then. And I don't, at this time around, I also don't expect that, or I don't expect that to be the case. I think Bitcoin will continue to be pretty hyper volatile because I really think that Bitcoin is nowhere near like its total addressable market. If Bitcoin like ends up topping out at like digital gold, where Bitcoin is maybe like $15 trillion market cap, and that's $600,000 to $700,000 per coin, which I don't expect that to be the case at all. I think Bitcoin is a lot bigger than just digital gold. But if it did, and that's where it ends up, at least in short to medium term, then maybe like Bitcoin becomes relatively less volatile at like that stage. But I still think that Bitcoin is so much bigger than that, and it's so small relative to everything, relative to what it can be. And because of that, I think the volatility is not going away anytime soon because it's just completely mispriced by the market. It's got so much more room to grow. There's going to be so many more speculators coming in and trying to trade the price of Bitcoin, trying to figure it out. Like no one really outside of Bitcoin, like, and even within Bitcoin, right? Like everyone argues how to price Bitcoin. Traditional finance is at a loss for how to price Bitcoin. Even we have the models where stock to flow, power law model, etc. That's a big argument. Like even the Bitcoiners, don't like the models. Michael Saylor says all of your models will be destroyed. We honestly like have no idea, or most people have no idea how to price Bitcoin. And if no one knows how to price Bitcoin, then would we expect the price of Bitcoin to be stable? It's going to be incredibly unstable. It's going to be extremely volatile. And again, I think Bitcoin is just money, so I think its total addressable market is massively higher from where it is today, and eventually people will measure other assets in money, and by money I mean Bitcoin. You'll measure your stocks in Bitcoin, you'll measure your real estate in Bitcoin, and stuff like that relating to the report that I wrote. And I think that's how you'll price Bitcoin, quote unquote. You'll price Bitcoin by pricing your other assets in Bitcoin. And most people, that will just lead them to holding a lot of cold storage Bitcoin, because that's a better way to save for the future. And so, yeah, I mean, I don't think the volatility is going to go away. And I expect significantly more than a 50% drawdown from the top of wherever the next bull market takes us.
Yes, especially because I mean, it's now also given to thanks to your description to if you have to put a Bitcoin in a picture, no, there is a lot of room to grow, and so therefore volatility cannot be low. But if you put try to depict Bitcoin, I would say that this average base layer of hodlers, like the entry price of the hodlers, will grow more. Is growing, will grow more and more, and in pair with also an expansion of this vortex. Bitcoin is a vortex which sucks everything, because we have talked about the option traders, all the people who increase the volume, also any other kind of attacks or things made wrong on layer one and other things. But nothing killed or stopped or Bitcoin. Everything is like any kind of energy which interacts with Bitcoin, either financial or any sort of energy, then ends up being sucked by Bitcoin and just making it stronger. Therefore, the way the room to grow is quite infinite. I just want to give you this picture of Bitcoin, like in a frame, like from something pushing it from the back, which are the order from below, and towards a vortex which sucks any form of wealth, energy, and a bit of everything. So we are still very early. That's just my point of view.
Also from my side, very good points on differentiating the cycle 2017, 2021. Not many people are aware or mention it. If we see in 2017, if we see the end of the month, is 14K in December, and then 10K in January, 10K in November. So this 19.6K, but just few days. While in 2021, we see both March, April at 60 plus, and also October and November at 60 plus. I want also to say you were not alone, both in 2021, 2022. I think 2021, everyone who was in Bitcoin was convinced we would have gone to 100K. And also Plan B was saying December 135K. We were all pumped, and it didn't up. It was muted. I think one of the reasons is we didn't have real institution, real following companies or big institutional funds following Michael Saylor. And then we had this all blow off of crypto exchange in 2022. I was also surprised that we decreased under, for me, 30K was, I would have said in 2022, whatever happened, we don't go down then 30K, because it was also the flow, the base, the floor in May, June, July, after we went down from 65 because of China ban and Tesla stopping accepting Bitcoin, but we reached 15.5K. So it was different market, 2017, 2021, with slightly less volatility. For me, on my side, I don't know if we will see again 50% again Bitcoin going down the next cycle, mostly for two reasons. First, now that we have the institution, so in the first 3 months, we have seen mostly retails buying the ETF. And these pension funds, mutual funds, retirement plan, 401k, they are making the due diligence. And also some retailers are also doing the due diligence. I think it's different between the same person, like 50, 55, 60 years old, putting Bitcoin in the brokerage account versus putting in the 401k, so in the retirement plan. I see if they take more time to move maybe 1, 2, 3% in the retirement plan versus the brokerage. But once they do, then they will not sell as if they have a brokerage account like Trade Republic. That's the first. And second, I think we may be close to an inflection point. In every cycle, there was always the vast majority of people were thinking Bitcoin is a bubble, speculative, it's very risky, and so on. But in this cycle, if we have really big inflow from the ETF with many institutions recommending Bitcoin, and with finally also financial advisor, at least some of them recommending, we will have many more people maybe seeing Bitcoin more as not the main asset to invest, as Bitcoiners are seeing. This will be asked too much, but Bitcoin having its position in a balanced portfolio. And if we have in every balanced portfolio, if we reach this level, so one side we have more institutional investing after the due diligence, and on the second side we finally reach the common people with the conviction that they should own a portion of Bitcoin. If we reach both, I see difficult that we go down 50% because likely the traders, people who will sell, will be less in percentage. What do you think?
Yeah, I mean, you make some pretty interesting points. I guess, like your example of institutions, if they are regularly rebalancing their portfolio, then, as Bitcoin goes up per se, they would be selling some. And then as Bitcoin goes down, they would be adding more to their position and kind of, hollowing out the volatility, which that's very true for that situation. I feel like, from my memory, people were making these arguments, and I back in 2020 and 2021, I agree. Like, I thought that there would be institutions that would be doing something like this, because I feel like other people were making that argument that Bitcoin's not going to fall more than 50%. I was one of them. Now I obviously was incorrect. So I'm scared to make like the same argument again, even though like I agree with like a lot of those points that you just made. I also still think that it depends on like what people like, I guess, qualify as an institution, quote unquote. Like to some extent, like if you like hedge funds or other like entities that would maybe technically institutions, I'd still say like those institutions are made up of people that aren't, are good, may have like a lot of traditional finance skills, may be good at a number of different things, may be great speakers and whatnot. But I still think that they're going to probably don't understand Bitcoin very well, honestly, because if they did, they would have already been in Bitcoin. So if they're coming into Bitcoin, they probably, in the future or soon, then they don't understand it right now, which means they're probably a little bit behind the curve in terms of fully comprehending what Bitcoin is. And just like you said, if you over allocate to Bitcoin, or even if you get a decent position and then the price absolutely soars, and now your position is pretty massive, and you don't fully understand what you own, and Bitcoin does fall to 50%, then it's probably going to freak you out. Like if you watch your net worth or your portfolio fall 50%, if Bitcoin's a significant portion of your portfolio, then that's going to kind of freak you out, and maybe you'll want to take some chips off the table or whatnot. I'm not saying that I would do that, but I'm saying that people that don't fully understand Bitcoin can easily get shaken out by the volatility. I mean, I've heard that story many times from many different people. And so I don't think institutions are honestly that much different from just normal people that don't understand that are, subject to Bitcoin's volatility. I'm hopeful that, Bitcoin's volatility will go away. I think it eventually will, right? Like on a long enough time horizon, decades from now, I would say it's most likely will be going away. But I don't. I mean, this cycle, especially if we have another blow off top, like we talked about earlier, 2021, we didn't have the blow off top. If for some reason we do get a blow off top this cycle, and we go through a month where Bitcoin goes from 100,000 to 200,000 to 500,000, and that's a period of a month or 5 months or 3 months or relatively short period of time, then that the price that Bitcoin traded at very temporarily for 500,000 or whatever it might be, any number, that price was probably completely or potentially completely unsustainable. Like at that point, we would probably have almost $100 billion worth of Bitcoins being mined each year, and as the market just cooled off a little bit and so much more hash rate came online, and miners obviously have to sell to cover their electricity expenses and the amount of hash rate did a 10x or more, then there's so much dollar sell pressure coming on the market after all the hash rate comes online, just from miners selling to cover their operating expenses. And then if if the market just cools down a little bit and there's not the same inflows that we've been seeing to get us to $500,000 per Bitcoin, then I think the market can flip really fast to where now all of a sudden you have this billions and billions of dollars worth of sell pressure, and at the same time you have the buyers that have just completely disappeared from the market. So that's kind of my view. Like, maybe you're right. Like, I hope you're right that Bitcoin only falls 50% or falls less than 50%. But I would still tend to believe personally that the cycles will continue and they'll be pretty volatile going forward too.
Okay. Yes. Thanks for your thoughts. I think there are both arguments for both, and we will see later on. Important is to hold and also it's very hard to forecast something that is new technology now, new institution. But what we know most is like we want to be in that ship. Now the ship can go the direction you say, maybe below 500%. 500,000 and then going down, or maybe going steadily up and not going down more than 50%. I think whatever happened, it's good. It feels good to be in this ship. And also, great point on highlighting the price. I think it also is the first factor for Bitcoin adoption is number go up technology. It's not for freedom or medium of exchange or censorship resistance, but it's a number go up. Another question I have is which would be for you the price where at least the main narrative detrimental to Bitcoin will go away? Because we have seen now there was always a very bad narrative against Bitcoin, and also as Michael said, there is not an informed against narrative against Bitcoin. They are uninformed, and we have seen in the last 6 months that 1 year, even people who were against, some they moved from against to neutral, some they became slightly favored, but also people who remain against, they are not using the same argument as before. For example, used by criminals now, it's less. No intrinsic value that he reached now 70K again after the fourth or fifth or seventh crash. It was declared dead for more than 400 times. So the negative narrative is also softening. Do you have a price in mind where you think after this, above this price, then it will be really hard for anyone who has a position against Bitcoin to keep having a position against Bitcoin?
Yeah, it's interesting to think about. Is there a specific price in mind where everyone's mind just immediately flips? I don't think that's not really the case. I think it's going to be a lot of like what historically has been the case, where as Bitcoin makes a very clear new all-time high above its previous all-time high, I think that begins to turn heads, and that forces people that said Bitcoin died at $16,000 at the end of 2022. It forces them to reconsider their position. And I also think like you brought up a good point about how the criticisms of Bitcoin evolve and change over time, whether it was, quote unquote, it's only used by criminals, or, it's using too much energy, or it's a bubble or a Ponzi scheme or whatnot. Like, I think that's one of the reasons why I'm so bullish on Bitcoin, is because I would read good arguments from people like Pierre Rochard or Seyfedin Ammous or Michael Saylor, and then I would critics, and people would just have really bad arguments against Bitcoin. And I think that was really just a sign that these people are short Bitcoin. Like, they just don't know what they're talking about. And if they actually took the time to do the research, then they would have a position. And I think what gets people to actually do the research is, one, if they have like a very clear need to do the research, right? Like, if you are experiencing some sort of like deep censorship or war, and you are trying to save your wealth and get your wealth from location A to location B, or your bank account gets shut down, or your social media gets censored, all of these things. And that starts to make it very clear to you as an individual that maybe you need some censorship resistant money, money that can't be diluted by anybody or any entity, and money that can't be censored by anybody or any entity. And so need is one way that I think that people will be interested in Bitcoin and will be forced to like give in and start to learn more about what Bitcoin is. Number go up, like you said, is kind of probably the main reason that people question their original assumption when they first learned about Bitcoin or first heard the word Bitcoin. I think that that's going to be the case. Is there, like you said, is there a specific price where that's the case? No, I mean, I think like all-time high will be like a significant all-time high, like above, $80,000 or so, or $75,000 or so, for some, more than like a couple seconds or a couple days. I think that will begin to turn people's heads and force them to reconsider some things. I think like 100,000, just being a very clear number that people are like, wow, like I would never have thought Bitcoin would become $100,000. Like and like $100,000 is a lot of money for a lot of people, and so that will force them to try to like figure out like, hey, how is this digital coin worth $100,000? Like I remember it being worth a couple $1,000s or $20,000. Like how is this possible? So I think that will turn heads. But is there like a specific price where everyone's going to wake up and be like, okay, I need to question all of this, and I need to like learn more about Bitcoin? I don't necessarily think so. I think will still occur in waves, and maybe the next wave will probably be bigger than all of the previous waves, which I think has been the case for every Bitcoin bull cycle. But I don't think like the next wave is necessarily like 100% of the people are like, I need to buy Bitcoin and I need to buy Bitcoin now. I think also like, part of maybe, I don't know, this is just speculation, but part of the reason why the bull market in 2021 was muted possibly was because we had so much monetary stimulus. Like, I think that might sound backwards at first, but my thought process is we had so much monetary inflation that in 2020 and 2021, everything went up. We saw GameStop, rip higher. We saw, Zoom go higher. We saw real estate go higher. Like the number go up signal of Bitcoin was clouded out by so many other dog tokens and Dogecoin and meme stocks and other public and private companies. Like everything went up. And so the number go up signal that Bitcoin kind of has relied on like wasn't as effective, and it didn't stand out nearly as much as it 2017. So I think if we go through like another crazy wave of monetary stimulus, which unfortunately I expect will probably be the case, then of course I think Bitcoin will do very well and it will probably do everything else. But it will also probably have another wave of meme stock and other nonsense that keeps going up, or even just high quality public companies like Nvidia. Like that's, to some extent, Nvidia is kind of clouding the signal of Bitcoin because people are still measuring their wealth in dollar terms, and they think Nvidia is crushing it when they should be measuring their wealth in Bitcoin terms. And it'll be very clear at that point that a lot of their assets aren't going up; they're actually going down in Bitcoin terms. But I think because of our unit of measurement, the dollar and other fiat currencies all around the world are twisted, or they don't work very well, then that leads to a lot of like people making worse decisions than they could be making. So yeah, those are my thoughts there.
Francesco, please go ahead.
Yeah, talking about your next bet as the average buyer, because nowadays mostly people in their 30s, in their 40s, purchasing Bitcoin, studying it, eventually changing their mind. Not too old, not too young. But if you have to spot the underdog for the next cycles, for the next 5, 6, 10 years, people who will actually bring Bitcoin to over $500,000 per price. Do you think Gen Z has a role on that? Because from what I've seen now, this generation is split into two. people from 18 to 22, 23, which have the first jobs, and then some of them they allocate to Bitcoin and don't have that much financial education, which is good because they can learn a lot of things from the internet, from YouTube, maybe from this channel. And on the other hand, there are the students who don't have capital to deploy. I don't know if they get interested into economics. Do you think this generation could be more immune to the propaganda or the government, therefore resulting in a better understanding of the monetary technology, Bitcoin, and eventually deploying more capital in the foreseeable future?
Yeah, I definitely think Gen Z and younger people in general are probably going to more easily understand Bitcoin before a number of other people, right? Like they grew up in a digitally native world where like the internet is how they communicate with almost everybody, and a digital monetary tool that's only on their computer on the internet. It will be a lot more intuitive to them than someone that's 80 years old who grew up before the internet. So yeah, I certainly agree that Gen Z and younger people in general will play a huge role in buying and saving Bitcoin on the regular. I guess like this wealth compounds over time, and if you haven't had much time, then you probably don't have too much wealth. so so yeah, like the baby boomers and people that are older obviously control a very massive percentage of the total global wealth, and they're going to be the ones that are really able to move capital and move prices in a pretty big way. With that said, I mean, like Michael Saylor, he's obviously not a Gen Z. Like there will be older people that begin to understand Bitcoin, and it seems like things like the ETF, where personally, like I don't think you should hold the ETF when you want to hold your Bitcoin, but there are it's not a bad solution for boomers to kind of like dip their toe in the water and to begin to say like, hey, like I want to buy a small percentage of Bitcoin or small allocation of Bitcoin. I want to get some of that number go up. And then once they get that number go up, then they start to question, do more research, like we talked about, that read books, listen to podcasts. And then they start to realize like, hey, like maybe there's a better way to hold this. Maybe like the ETF isn't the best vehicle to buy and hold Bitcoin. It's a great starting point, but it may not be the end all be all. So yeah, I think Gen Z will obviously be, especially when the number starts going up again. I think like they're going to start to get Bitcoin, and they're going to start saving Bitcoin. At least some of them. Of course, some of them are going to start sports betting and playing meme stocks and playing dog tokens as well. Unfortunately, especially if the number gets clouded by another wave of monetary stimulus. But I definitely think, like, regardless, some people will actually begin to figure out that Bitcoin is the best for long-term savings. And yeah, it's just like another wave of adoption is going to come in and recognize that and start buying Bitcoin.
Well said on the topic for Bitcoin versus crypto. We had the interview with Tur Demister, and we discussed also about this demographic distribution. So both Francesco, me, and Tur are all millennials, and we were also saying the millennials are the one. It's the spot in the luckiest position because if they are above 30, generally you are obviously more interested in savings, and because generally you have a stable job, you have savings, and secondly you can still adapt to the technology, but also not so much distracted from crypto. That's why also I think for Gen Z there is also the risk that many they are more in tech. And looking only at Bitcoin, it sounds, at least in your generation, I think it sounds more like a boring or more limited, while we all know that is not true, but it is as perceived. Like they say Bitcoin is an old technology, or okay, but there is also many other things. Or okay, Bitcoin you can do 5x, but with a this crypto coin you can do 100x, and this kind of whole narrative unfortunately appeal more someone who is younger. And personally, I always have a great respect from someone who is Gen Z, because I think in your generation it's even harder to follow only the signal and not and ignore the noise. I think as a millennial it will be easier. So more great, well done in being all in Bitcoin and being a millennial.
Yeah, I mean, you definitely made a good point. Like, it is unfortunate that people like get distracted with the dog tokens and ordinals and you know, GameStop or GameStop or whatever. But yeah, it's like the part of the reason is like the world we live in today is like with TikTok, Instagram Reels, and short-term immediate dopamine hits. Like people are very accustomed to, you know, hitting the roulette wheel, you know, so to speak, and rolling the dice and gambling. And so it you know, Bitcoin is a good tool, but you have to have that discipline and low time preference to recognize that it is a good tool that you know, you should be using as long-term savings, and you should actually be thinking very long-term as just a person in general. But Bitcoin is actually what enables you to kind of do that from a monetary perspective. So yeah.
And do you think you mentioned also the crypto part in 2021? And I will also add it was not only crypto; it was a full uh, bunch of things. It was like Web3, NFTs. At that time, I was also mostly in Bitcoin, but had also some other crypto coin. I was slightly also interested in Web3 and NFT. Then I became a Bitcoiner the year after 2022. But now, for example, NFTs, it's more than 90% they are zero. They went to zero. Also, Web3, there is much more criticism now. And in the same bull run we had from 40 to 73, we felt that the altcoin season it was not as strong as 2021. So it may be next bull run finally Bitcoin will be the king and only one king, and not not as much distraction as 3 years ago.
Yeah. Yeah, I mean, it was one thing that I've said like before. I think I actually saw Fred Krueger who like tweeted this the other day. He said like altcoins are high theta to Bitcoin, or to time, I guess. And kind of what that means is like they other assets like altcoins decay over time. And I like to say that like altcoins are highly speculative bets, are high beta and high theta to Bitcoin, meaning like if Bitcoin, you know, historically has been the case, if Bitcoin goes up a lot, then altcoins also can go up a lot. But you know, you don't actually know when Bitcoin's going to go up a lot. So it's and over time, altcoins are high theta, which means they decay over time. And so over time, altcoins are turning to zero, and there might be a very brief period where they just go absolutely crazy and increase in price, the high beta relative to Bitcoin. But because of the theta, and because you can't time Bitcoin, or you can't time it really any market, you're way better off just holding Bitcoin. So yeah, I mean, I think that altcoins are just not the smart thing to do. And what was your exact question? Sorry.
If we will see
Oh
less
yeah,
impact of the altcoins
right.
in the next
Yeah,
cycle.
yeah, it's a good question. Like I feel like this cycle has been like I mean, from the little following the altcoin market that I do, just from seeing things on Twitter, it feels like this cycle, or like previous cycles, like 2017 was like ICO craze, and then maybe 2020 and 2021 was like a DeFi craze, or like an alt ETH craze, where it's like Solana or other, I don't even know what the other ones are, but something like ETH that's not ETH. Like that was kind of the big trend, and DeFi type stuff in general was like the big trend in 2021. And then this cycle, it's been like the meme coins, where it's like buy like the stupidest thing you could possibly buy, and that's actually has better odds than someone that's trying to build a quote unquote like real project, real crypto project, whatever that means for anybody. So I think that to not expect there to be like another quote unquote alt season, yeah, I think I mean, I hope that's the case, obviously, and I hope people just recognize like you should just buy Bitcoin. And I think that's the best risk-adjusted play is to just buy Bitcoin. I still do think that there's going to be some sort of like, I don't know what it will be, whether it's ordinals or NFTs or DeFi or meme tokens or something else probably that I don't even know of today. That will be the next alt season, and that's going to, enable, those are going to potentially rip. But I would expect like NFTs and, you know, ETH and other like the other altcoins that have kind of already had their manias throughout the various cycles. I would expect those to continue trending to zero and to not outperforming Bitcoin, but there may be like some small segment of the market of some market that will outperform Bitcoin on a very short time horizon. I just have no idea what that would be, and I don't think it's worth the time to even start trying to investigate what that would be or trying to guess what that would be because you really have no idea, and it's just not worth the time. You should just buy and hold Bitcoin.
Totally agree on the last point. There was also a research from Swan was saying only I think 3% of all coins they outperform Bitcoin in after the ATH in 2017 and 2021. So yes, there are some coins. One has a portfolio of coins. It's very likely that will underperform Bitcoin. Totally agree. Just go on Bitcoin. Another question I had reading your report, it was a very one point also I liked. I really liked it was your comparison between Bitcoin and gunpowder, gunpowder. That meaning that if at the beginning is a new technology, but at one point, if you don't use, then you will become a loser. So it's better if you use as early as possible. And one comparison I can do, I don't remember which book I read, probably from SafeDin, was the comparison between silver and gold. And in 1600, Europe was coming out from the Middle Age, but the level of civilization between Europe, India, and China was not that different. And one of the reasons why India and China remain behind was that they hold on silver for too long, while Europe moved to gold. And similar to your comparison on gunpowder, that explain why people should embrace new good technology as early as possible. Can you elaborate on this topic?
Yeah, absolutely. Yeah, and I wasn't the one that in particular came up with the gunpowder analogy. I love the analogy too, and I put it in the report. I believe SafeDin was the first one to actually come up with that analogy, and I think that should be cited in the report, which I like it is. But yeah, it's a really good analogy, and I really like it because I think it accurately does describe reality. It's like if you are a civilization or you are a group of people, and you're living a few hundred years ago, and you're using bow and arrows or spears or whatnot, and all of a sudden another civilization discovers gunpowder, then it doesn't matter if like you say gunpowder is a bubble or you deny that gunpowder exists or you ignore it. It's like this is a new reality that your enemy neighbor has discovered gunpowder, and he potentially has the ability to conquer your society and take over and take over your little civilization or your little city. And so it's very important. I think when it comes to money, there's not much of a difference, right? Like we aren't at physical war with each other when it comes to business or building and creating wealth, but we are in direct competition with one another. Like we're building businesses that have competitors. We are employees, and we have other people that are trying to go for similar jobs that we have. And I think that this idea of free markets and free competition is a good thing, and we all benefit from it in the long run. But it is like brutal if you are a business or you are just an individual person that's out there competing in the market. And it's just similar to war, where it's like if someone is using a more superior monetary tool, or they are measuring their wealth or their projects within their company using a superior monetary tool, then they're going to be able to make better economic calculations and better financial decisions than you are, right? Like if you are still using shells as your money and you're trying to increase your revenue and profit in terms of shells, well, then, your revenue and profit could keep going up for a long time, and you could be making a lot of bad investments just because you think that you're doing well, when in reality, your revenue and profit could be going up in shells or dollars over time, but it could be going down in Bitcoin terms, which means you're making bad investments, and you probably should just be holding Bitcoin instead of pursuing some of those bad projects. And just because, as an operator of a business that's operating on the shell standard or a dollar standard, that doesn't mean that Bitcoin doesn't exist today. Like it exists today. And if your competitors are adopting a Bitcoin standard and they're using Bitcoin as their unit of account, then they're going to economically outcompete you and accumulate more capital because they're using a superior monetary technology. And I don't think that when it comes to in gunpowder situation, it comes to like who's conquering land per se. In monetary situation, it comes to like who's conquering real wealth. And if you're conquering real wealth, you need to be using the best money. And if you're using an inferior money, then someone else is going to be conquering that real wealth. And I think that real wealth in monetary terms is Bitcoin.
Thank you. Very good explanation. Francesco?
Just a question, because we know you're an analyst at Unchained. You take care of self-custody through a decentralized multi-sig way for people to safely hold Bitcoin. It's very good. But we were talking about ETF before, and there are different approaches. Everything is good. I mean, to dip their toes, exactly. But recently we have witnessed something a bit weird, in my opinion. Like, do you remember when the president pledged to put a veto on the banks to become custodian Bitcoin? It's something that it wasn't done for the ETF. Nobody placed or threatened to place a veto on the SEC approval. So it's like the two things were treated quite differently. Do you think that big corporations like Apple, Microsoft, or whatever, is not enough for them to deploy capital in ETF? Do they need banks, custodians to make the leap? It could be this a reason. And also, do you think banks could have a role in the future as a custodian, decentralized custodian of the seed of a multi-sig you offer, for instance, maybe a backup copy of it? That's
Yeah, it's a really good question. I guess like when it comes to large corporations holding Bitcoin and speaking on like the exactly how they want to custody it, I'm probably not the best one to answer that. Whether that's like they need specific regulations or whatnot to even have the ability to custody it like legally and compliantly with the strict rules that I'm sure these large corporations have to follow. I think obviously MicroStrategy is legally compliant and doing everything that they can do, and they're holding Bitcoin in the way that that makes the most sense to at least to them personally right now, and from like a regulatory perspective, like just the less barriers for and less questions that they'll get asked for holding billions and billions of dollars worth of Bitcoin. I think like the biggest hurdle to large corporations adopting Bitcoin is probably just like the sheer size of those corporations. And like Saylor has talked about this before, where he was kind of a very unique situation where he founded the company, he was CEO at the time. I think he like had a controlling number of shares. Like the board couldn't just force him to not be CEO anymore if he went crazy, which a lot of people probably did and still maybe even do think Saylor went crazy. He's like this crazy Bitcoin guy, and he's plowing all of the company's excess savings into Bitcoin. But there's nothing that the board or whoever, from my understanding at least, that can do, because he has kind of like the sole control of the company at this point. Whereas something like Apple or Nvidia or other large corporations, like there's not really one person or even like necessarily like a couple people that can make a very big decision to deploy or to adopt like Bitcoin as their treasury reserve asset. Like obviously that is still a very fringe idea, and fringe ideas typically don't don't get converged on from like a large group of people, whether it's 20 plus people or 50 plus people or 100 plus people at like, Google or Facebook or NVIDIA or whatnot. So it's more of just like those are big ships that are run by many, many, many different people. And it's not just like a big ship that's run by one person. So I think that's probably like the biggest hurdle to adoption. And I think that the reason that will take some time or the reason that we haven't seen Apple adopt Bitcoin or not is because it's a big ship run by so many different people. But once Bitcoin becomes more mainstream, I think that we will see companies like Apple and Microsoft and whoever actually adopt Bitcoin. To me, it seems somewhat inevitable. It's on a long enough time horizon, as long as Bitcoin doesn't break, it seems like it's going to happen. It's just a matter of time and a matter of more number go up, less stigma that Bitcoin is fringe, and greater understanding that Bitcoin is one of the best ways to preserve wealth over the long run.
Thanks for the information, especially on the last topic. Personally, I'm saying to people, there is no need that debate between people who studied Bitcoin and with people who didn't study Bitcoin, because first they should do the work. And as you said before, when you see the articles, people arguing against Bitcoin, it's kind of embarrassing that their theses are so weak. I'm always trying to explain. Is Bitcoin on the way to reach 1 million? On this way, one by one, all the skeptics will become advocates for Bitcoin. I see much more this than the solve on what Bitcoin is, not a debate between people who understood Bitcoin and people who didn't understand Bitcoin. I think we are also approaching the end of of this episode. Francesco, you have any other question for Joe? Otherwise, we will go to the wrap up.
No, we can finish.
Okay. Yes, I think it was a great conversation, Joe. If you have some last thoughts or last thoughts for our listeners, now in X and later on in YouTube and in Spotify.
Yeah, no, I really enjoyed this. I feel like this was a fun conversation. You guys had like fantastic questions and fantastic thoughts as well. So really appreciate you guys inviting me on. Glad we could be flexible with the date too. I know we originally had it yesterday or tomorrow, but glad we could go ahead and knock it out today. At the start, we talked about the report that I published called Your Wealth is Melting. If you want to check that out, go to unchained.com/melting. It's free to download. It's 37 pages. Feel free to, my DMs are open. Let me know what you think about that report or just anything else in general. Always happy to talk to people that are interested in Bitcoin. And then, if you're looking to secure and hold a significant amount of Bitcoin to you, then I would definitely check out unchained.com. In my opinion, it's one of the best ways to securely hold Bitcoin as an individual or a corporation or a small business. Thanks again, guys, and really appreciate it.
Thanks, Joe. You want to go next?
It was a fantastic appointment also for me in this series of podcasts. Now Turner Video, we try to extract the maximum knowledge from every guest we have, trying to stimulate him. We knew you had a very economical financial expertise, and we think we addressed and broadcasted that very much to our audience. So thank you for having answered so precisely, and I hope there will be another occasion to have another meeting. Thank you to the audience.
Yeah,
I can double down. Yeah, Joe, please go ahead.
Was just gonna add on. Absolutely, really enjoyed it. Happy to be able to do it again with you guys. It's awesome.
Yes, for sure. We will invite you maybe for the second season when we will start the second round. So it was the 14th episode, and in every episode we discuss with Francesco. We really enjoy having this conversation among people who it's clear that they studied Bitcoin for so long. So it's great conversation. Also, we are not sure about the future, but it's good to discuss from this different perspective from people who study Bitcoin what we can expect in the future. Thanks again. Also, we will also put the link of your X account as your report, your melting in when we will advertise in Spotify and in YouTube. And for the listeners, we will have now next week Jimmy Song for the 15th episode of the podcast, Bitcoin as a Store of Value. Thanks again, Joe. Thanks, Francisco, for co-host. And see you in one of the next episodes. And Joe, let's remain in contact. Bye.
Absolutely. Thanks, guys.